Alright guys, so you made it this far, found the property, you've found a realtor, or maybe I helped you find a really good realtor that I know, and then you've made it to the next steps. You understand all the process with property tax deductions. We even ran some hypotheticals, like what you could expect in the future when interest rates come down. Now let's assume that we are in the future. Interest rates came down and you give me a call, or probably, the way I work, I will call you when I know that I could save you money. Let's say rates came down and we're ready to do the process. A lot of my clients say, so how do I refinance where it's best terms and lowest fees, and how does it work at all? So this video is for you. Keep watching. So let's go back to our example. $800,000 purchase, $40,000 down payment, $12,000 closing costs. You bought the house with $52,000, but now comes a time where it's time to refinance. The market more than likely went up because we're talking about a couple years down the road. The interest rates came down. We started this with 6.375 fixed for 30 years, which the mortgage payment, which includes principal, interest, and PMI, is going to be $4,925. Now the rates came down. I know I mentioned in the previous video that 3 might be aggressive, but I do believe that we'll see it in the next couple years. So let's say we catch this rate, and for the sake of easy numbers and keeping it apples to apples, we're assuming that the loan amount is the same, just so you can see the difference. But in reality, if this happens in 2 years, your loan amount is going to be less because every month you've been paying it down. However, let's use $760 and let's use 3% interest rate. Now the monthly payment for your mortgage, principal, PMI becomes $3,387 per month. Guys, this just saved you $1,537 per month, or almost $19,000 per year in mortgage payments. That's crazy. Now, one of the biggest topics, like I said, people are asking me this even today. Steve, how much does refinance cost? Normally, a refinance is going to cost you between $3,000 and $4,000. Let's use $3,500 for the sake of this example. That's the fee for all the third-party fees, the appraisal, title, escrow, notaries, everything that has to do with the loan closing. And there's 3 options how to take care of this expense. One of the first options, one of my favorite ones, is to find a bank that is so interested in your loan that they're willing to pay off your current lender and give you a rebate to cover this $3,500. During the last refi boom, probably 80-85% of my clients, this is the route we would go. I would look every day, I would find a lender that has a credit for this $3,500. We would lock it in, and then we would do the loan with them. Now there's another option that's also popular, because sometimes people want a certain rate and then it maybe doesn't have that $3,500 rebate. So you could always just add $3,500 into the new loan. So say that your loan is $760. Now what we can do is we can make the new loan with the new bank $763.5, and then this way, that amount you're financing, you're spreading it out over 30 years. The monthly payment, you won't even feel the difference. However, it's a way to kind of not fork up any cash when you're doing a refinance. And then the third option, not as popular, but it also happens, depends on your situation, depends on the market at the time, is just to say, you know what, Steve, like, we'll just pay the $3,500. We don't want to increase our loan. We want this rate. It doesn't have a rebate. That's fine. We'll take it. We're saving so much money that we're going to recoup this amount in 3 months. Guys, imagine, even if you have to pay $3,500 out of pocket, but you're saving $1,500 every month. You do the math, that's less than 3 months that you break even. Now, guys, all of these options are amazing. They're all good options. I've done every single one with my clients, even my personal properties. You don't always catch a rebate. We do try. It's ideal situation, but sometimes the saving is so much, especially in the volatile rate market. You don't want to risk losing a rate. So sometimes $3,500 is not a bad option to pay out of pocket. But option number 1 is something that's most popular when you work with a mortgage broker, because mortgage brokers, we get an opportunity to shop your loan. I could open a screen, I could put in the variables, the data, and I could see a full breakdown of which bank has what option, how much rebate they're paying. And if I see something I like, sometimes I won't even call you. Like, I'll just lock it in knowing that this is something that you're gonna love. Like, who doesn't like free refinances, right? So this is something that mortgage brokers are the way to go, not only on your purchase transactions, but when you refinance, this is also gonna be your destination. Guys, thank you so much for watching this series. Again, my name is Steve. I'm your mortgage broker, president and founder of AUE Lending. We're located in Walnut Creek. Currently, we're licensed in California, Florida, Washington, and Missouri. And I'm looking to add more states in the future. So if you have any questions, you want to set up a free consultation, or even if you live in other states, like, I'm always willing to help. I'm always willing to talk. So I'm really looking forward to your comments, likes, and please don't forget to subscribe to the channel. Thank you, and I'll catch you on the next series.